Hi traders and welcome to the Friday Market Watch on the 21st of October. So I've seen a bit of a down market this week really on a lot of the key indices and some of the currency pairs that we're always looking at, but there could be some opportunities coming up with some key levels fast approaching. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and you can see look, it's certainly attempted to get up there throughout today's session, and you can see the last few days we've been a little bit of weakness. We started out the week relatively strong, but it did hit that peak here that basically was going to be a little bit of resistance for only short term at around that sort of 63.50 area, but it did come back down now and effectively touch the 62.50 again. So pretty tight range in the last few days, but it's really starting to pattern up to a level where if it is going to go, it could form the lightning bolt that we're after to actually get above the 20 moving average here in the first instance, but also this really important zone that was previous support. So I'll drag that out a little bit further so you can see what I'm talking about. This is the key zone. If we can get this part broken here at around that 63, it's actually a 60, call it 64, it's close enough to 64, it's only a handful of pips off it. If we can get that level broken, we've got the lightning bolt that we need on a daily chart to say that we're very comfortable that the next target after that is around the 65.20 area. So really easy level to aim for, but it's got a little bit of work to do obviously to get there. But there are two important factors. Firstly, we want it to hold at this level. The 62.50 must hold to really keep the lightning bolt alive. The only reason this is a lightning bolt is because it's a higher low. What we don't want to see is price getting down around the same lows at around that 62 level, because then all it's really doing is forming a double bottom and actually potentially testing another breakdown. So it's awfully important that it does hold up at this level, and if it does go and fulfill our plan and actually get above the 64 level here, we've got a very, very strong lightning bolt on a daily chart, which is it's gonna be above the 20 moving average at that point. We've got the lightning bolt above the support level, so it's breaking the resistance, and then we can comfortably aim for around that 65.20 area. So good trading on the Aussie, I think. It's just really a matter of waiting for the break. If you want to scalp it though, the scalping opportunity is obviously to the previous high. So 63.30 here is the first target if you are going long. Okay, so you don't want to be going and trying to hit the resistance in the first instance if you are scalping, because this is the easy move. But of course, failing that, if we do get a break below 62.50 and a daily close below that, you can scalp down towards the 6200. It's only a 50 pip move. I'd be reluctant to be shorting it much further than that until we get some price consolidation down there. But they're the two moves that I'd be looking at on the Aussie. US dollar CAD is the next one we'll have a look at, and look, it's done its best to hold above the 20 moving average this week. You can see we're still on a daily chart. You can see with the last 3 days we've tested it and tried to break it, but it's managed to close itself above the 20 moving average, which is obviously a very strong sign. While it's doing this, there's no reason to be thinking that it is going short. I mean, it is still technically making higher highs and higher lows, even though it is at a very high level. So in reality, if you're going for a scalping opportunity here on the CAD, the level that you're going to be aiming for is the previous highs, of course. So 138.80 is the level that I'd be aiming for a long opportunity. And if we do get a break below the 20 moving average, and when I say break, I mean a daily close, which it's failed to do over the last 2 days. If we get that in the last session of the week in the US, and that's where we are on Monday morning, then we're going to start to aim for that 136 level, which is the next real logical target. That's the next level of support that should be held up by price action there. It's a bit of a role reversal zone. So I think that's pretty much where we're at. I mean, if we can maintain the hold above the 20 moving average until Monday morning when we start to trade again. If it's above here, we'd be looking for scalping opportunities up to the 138.80, and if it's below the 20 moving average at 137.15, then we're going to start looking at the 136.50 level as the next target for the short. So pretty straightforward trading there on the CAD. All right, we'll move over to the US dollar yen. The all-conquering US dollar yen will not stop going up. Now, the blue line that we've got here does signal the 150 level, which is a psychological level, round number, all of the things that generally make a market stop. Whether it's going to actually stop this one, I don't know, but I would be very, very reluctant to be trading it long from this point onwards until it does actually retrace a little bit. Now, if it does do a bit of a test of the 20 moving average, or it even comes back and actually touches the top of this resistance zone, which what was resistance will now be support. It's a role reversal zone, obviously. Even then, you would still be relatively bullish on it. I think that if we get a change of trend at around the 150, what I'd be looking for now is, rather than going for the longs, because now that it's hit this level, I'd be waiting for a pullback. I think if you've already traded it, I mean, you'd probably already be taking your profit at 150 anyway. So I'd be looking for a small change of trend around this level. Look for a series of lower highs and lower lows. In the first instance, I'd be aiming for the 20 moving average. By the time it gets there, the 20 moving average may well be in the 147s, but it depends on where it is. But the significant pullback would be all the way back to the role reversal zone at around the 145. Yeah, that's 500 pips away. It's hard to see it doing it in a couple of candles, but like anything can happen, of course. I would be targeting the 20 moving average in the first instance and expecting it to probably get to around the 147 after another couple of days of trading. Even though it is going up, it's only sort of creeping up there in a very, very I guess orderly fashion, you could almost call it. Not massive moves, and generally what that means is you're going to get reasonable trading opportunities on the 1 hour and the 4 hour. If you go to the 4 hour, you can see we've got a nice series of higher highs and higher lows, touches of the 20 moving average, which kept it going. And then even on the 1 hour, I mean, the 1 hour is going to be a bit of a trading bonanza, really. If you traded off the 20 moving average on the 1 hour in the direction of the prevailing trend, you could not possibly have screwed this trade up. So realistically, you should be well and truly, you would have had many, many entries. So realistically, yeah, I believe that it's going to be a difficult long from here, because I think the pressure is going to be on the 150 level. So I would be waiting for a small time frame change of trend, a series of lower highs and lower lows, say on a 1 hour chart. That would be enough for me to start looking for shorting opportunities down to the 20 moving average. I would wait for a pullback above the 150 if we're going to go long. So if it wants to keep going, and it does, and it keeps going to say 151, and then comes back and touches the 150 from above to touch it, that's a different story. Then we start looking at long opportunities from there again. So two ways to play it, but I think the shorting opportunity and being a little bit patient is probably the sensible approach on this one. But it has been a very, very good trade and very, very orderly. All right, we'll move over to the dollar index now, and the dollar index has been trying to maintain this level above the 20 moving average. Is very, very important for it to do so. It's a real do or die level for the dollar index, because realistically, if we get a break above the 113.50, it's going to be very, very bullish, especially for next week. But if it fails to maintain this level above the 20 moving average and starts to track down to around the 111.80, that's going to be a very bearish sign for it, and yeah, strong for the euro, obviously. So very, very important zone here, because a break above this level here is going to be very, very significant, and a break below here is equally significant. But we'll go to the euro, because that's the real beneficiary, of course. I've still got the lightning bolt drawn on the euro, because this is the one where, yeah, realistically, if it does this, very similar to the Aussie in a sense that if we do get that close above parity, it's going to really open up good trading opportunities. Yeah, basically every 100 pips all the way down. Like, we followed this for a long time, and it's still technically in a downtrend, of course, but the only thing that's going to stop this downtrend is a break above parity here. So we'll see we've got the low, the high, a higher low, and of course at that point we'll have a higher high. It'll be above the moving averages, just like the dollar index. Yeah, this is struggling with the 20 moving average. If it maintains its level above it, and realistically it's similar in the sense that if we close below the 20 moving average at around 97.50 on a daily chart, you're going to be starting to target the 96.50 to 96 levels basically early next week. So that's what I'd be doing. So really, we want to wait to see what the US does. If you're going to scalp it, these are your scalping zones, 96.50 up to the level here, which is 98.70. That's the scalping zone if you want to scalp it. But if you want a longer term swing trade on it, it needs to close above the 98.80, and then we start aiming for parity. And then if we get that break, that's a different story altogether. But of course, if it breaks below the 20 moving average, we start looking for shorting opportunities down to the 96. So if it closes below the red line in the New York session on Monday morning, that's where we're at. Pretty easy trading, I think, on that one as well. So it's really behaving itself, but it's time. It's a very, very important zone. I look at these levels and see them as a very, very important zone as to the context of where it's going to go in the next couple of weeks of trading. So very interesting to watch. All right, the last one we'll have a look at, of course, is the S&P 500. This one has been battling with the 20 moving average as well all week. You can see that the double bottom has certainly formed at this level, but it has failed to get to the neckline at this stage. it would want to hold above the 20 moving average. If we get a close on Monday morning in the last New York session and the daily is below the 20 moving average, it's a pretty straightforward week. We start to look for trading opportunities down to the 35, 70, 80 area around this level here. I'm not so sure this will break or hold this time, because realistically, you know, if this was the bottom, it should have been able to have enough momentum to get to the neckline and then push on. But the fact that it hasn't actually reached the neckline and made a lower peak is telling us really that the momentum wasn't even strong enough to actually get that job done. A touch of the support now at around the 35.80 is going to be a very, very bearish signal, and a break below it, well, yeah, that's going to really open it up to some more significant shorting. So very interesting candle this is going to be. It must maintain its level above 20 moving average if on the daily, if it's going to be strong next week. So the way I'm treating this is, if we're above the 20 moving average at the close on or say tomorrow, and then Monday morning, we start looking at trading opportunities up to the 37.50 again. That's the easy scalp. Then on to the top of the neckline, which is around the 3800 level. If we get a daily close below the 20 moving average, I'm going to start targeting the 35.80 and looking for shorts, going to the smaller time frames and looking for the swings of lower highs and lower lows and trading in either direction. So I think it's good trading on both sides, no question about that. It really comes down to which of the daily close we're going to get. Is it going to be a short one, or is it going to be a long one? So yeah, good trading, I think, coming up for next week. So thank you for joining me. I hope you had a great week's trading. We've seen some really good opportunities. I think the market's behaving itself very, very well these last couple of months. So hopefully you've been able to take advantage of those. Have a great weekend, and I look forward to seeing you all next week.